There we go. I think we are now live on YouTube. Let's get it live on Instagram. Here we go. Hello, YouTube. Hello, Instagram. Hopefully this works. What's up, everybody? Hey, Ross Philly. What's going on? Doge to the moon. What's up, guys? How's everybody doing? Instagram. Hey, Bunad. Is Credit Suisse the new DB? I don't know. You tell me, man. Hey, everybody. Let's see what else we got. We got people coming in on YouTube now. Doing a live stream there. How's everybody doing over on YouTube? I'm starting a little early today because I don't have as much time. I got to drop off for a call. So I wanted to get in at least, half hour or so. So hopefully we'll get more people joining in about 8 minutes. Oh, you guys can't hear me? Can Instagram hear me? Can you guys hear me? Can you hear me? Somebody said I'm not audible. So yeah, guys, this is just, okay, cool, you hear me. Yeah, so this is just basically anybody who has questions on anything. I can give an update. I can answer questions on Wall Street Oasis, on career-oriented stuff, anything you want. It's just an open, cool. Yeah, it's just an open, what we call office hours. Just try to give everybody kind of heads up. Some fun stuff going on with WSO. We continue to build towards a new kind of subscription product for investing called WSL Alpha, which I'm hoping to release next month. We are signing deals with like some top financial newsletter writers that have paid subscriptions, kind of licensing a portion of their stuff, the stuff that I think is really, really good. And most of the advice from that has come from hedge fund professionals, equity research professionals that read this for their job. So trying to get that in a package that's super cheap for all of you so that it can be available to the masses. So Vic asks, how does networking work? Vic, I would go on WSO. There's probably thousands and thousands of threads on WSO about networking, so to speak. So no need to guess. You should just read as much as you can in terms of like sample stuff like that as well. So yeah, WSL Alpha, going back to that real quick, the goal is to kind of put in front of a lot of the younger audience who kind of chases a lot of the Wall Street bets kind of stocks, try to get a little bit more of a balance, so you go on YouTube, you either have the people who are like screaming to buy crypto and put all your money in Tesla, or you have on the other side, you have people who are doing these super deep dives. We're trying to find something in between where we're giving you access to these super high quality deep dives, but also making it a little bit more entertaining, a little bit more fun as well. So kind of in the same breed of WSO. So you could think of it as somebody who's like serious about investing, but also doesn't want to be bored with like just a monotonous kind of deep dive. So we're kind of trying to find a balance of like how often to actually message everybody in the community about different trades that we're doing, stuff like that. Trying to figure out if we can have like a mock portfolio for WSL Alpha subscribers. But yeah, it's not live yet. Probably gonna have it live in a month or so. We may start with just more of the deep dive stuff, high quality stuff. I call it high quality because it's like several thousand words of a deep dive on a specific company and a specific stock. We may start with that initially, and then kind of from there roll out more of like the daily market commentary and the mock portfolio stuff. But I think it'd be fun. I think it'd be a lot of fun. I think there's definitely, we could do a great service to actually have some voice of reason and actually have so basically so what makes me nervous is seeing everyone just talk about Doge and crypto, and I'm long crypto all the way, but it makes me really nervous when young folks like yourself, see, I got the gray beard, young folks like me, or young folks like yourself, when I hear just so much of this, what worries me is that people put a huge percentage of their net worth and their savings into those coins. So just want to make sure there's a little more diversification going on to protect your hard-earned cash. So yeah, that's that. Yeah, when I do these office hours, just for the Instagram audience that's here, I do it also on YouTube Live in case you want to check it out there. I'd be really appreciative if you could hit the like button, subscribe, whether it's here in Instagram or on YouTube. So yeah, that's kind of what's going on. Yeah, that's what's going on. Hey, Eric Quinteros asks, hey, Patrick, just jumped in. What's your opinion on the Patriots drafting Mac Jones at 15? Eric, to be honest, I don't know. I haven't seen enough tape to really know how good Mac Jones could potentially be in the NFL. From what I understand, there were some rumors he'd go at 3 to San Francisco. So the fact that they got him at 15 without trading up and giving any draft capital up is pretty good. I'm really excited about the getting Barmore at, 38 or something, moving up there, being aggressive. That almost never happened, so that was exciting. Hey, Josh. What's up, Patrick? Just watched a few of your podcasts. Hey, thanks for listening, Josh. Appreciate it. So yeah, just for the Instagram crowd, on YouTube, I share a screen. So sometimes if there's specific questions about specific firms or whatever, I can dive in and show you guys stuff in the company database. On Instagram, question, Shataba Niogi, sorry, I'm blind, asks CFA versus MBA. I think this really depends on what you want to do long term. So CFA, you should think of it as the certification that's a little bit faster, cheaper to, and then also targeted more towards asset management careers. So hedge funds, equity research, asset management, that type of stuff. So that's where the CFA is more respected and kind of valuable. Versus MBA, if you're looking to do more corporate finance, even investment banking, it's a great track to investment banking or management consulting. The MBA tends to be a better choice for that, especially for career changers. The MBA is a nice reset, but it's not cheap. It is fun though. One sec, I need coffee. The kids kept me up all night last night. So should we get the Series 7? Was a question that was asked. I think right now you can take the SIE before having it. I think still for the Series 7 you need to be sponsored by a company, so you wouldn't be able to do it until you're working. I don't know if you're working. For investment banking, it doesn't make a lot of sense. I think they have you take it for sales and trading, but if you're at a larger bank, they have to have you take certain ones. So now the SIE is kind of that base exam, and then there's now the Series 7, 66, all these other ones are more top-off exams, I think is how FINRA's structuring it now. But yeah, you can look up SIE on WSO. We actually have a SIE course here to help pass it. FINRA SIE exam prep right here. But it's one of those things where it's I think they opened it up so now anybody can take that. It's kind of nice to show it even if you're not going into, even if you're not trying to kind of break into sales and trading or anything like that. You can still take the SIE if you're a liberal arts major, and it can show a little bit of interest in finance and stuff. Yeah, I'm excited for Mac Jones. A lot of people are mentioning Mac Jones for the Patriots. I think it's pretty exciting. Josh asked, thoughts on going from, this is from YouTube, thoughts on going from the big four management consulting into upper, lower, middle market private equity. Hey, Josh, I think it's going to be tough to make that transition. I've definitely seen people go consulting to private equity, but it tends to be McKinsey, Bain, BCG. And then from those, even those candidates struggle because there's just not as many private equity funds that target consultants, although they do exist. So I would try to look at, when you go through LinkedIn, I would try to look at who's working there and alum of previous employees. And this is why I always say it's good to invest in Sales Nav because you can do these searches pretty easily. But you could look at a specific fund and see, did they previously work at a McKinsey, Bain, BCG? That's going to probably be your best shot. Josh, if you're at a Big Four management consultant. But I would say lower middle market is probably a better bet in terms of just your odds. Because then it's just really who you know. So, I mean, you're going to have to do a ton of networking just to even get looks. The recruiters are probably not going to help you out much, if at all. So, just a word of warning there. I wouldn't. It's definitely not a well-trodden path there. I think probably more common would be to go Big Four management consulting, Big Four transaction advisory services to top investment bank, then to private equity. Although by that point you might be like 30. So I don't know. I don't know if the private equity funds would look at you the same way, but there's probably some ageism going on that they won't admit to. Let's see what else we got going on here. Instagram. You're welcome. You're welcome, guys. What's the best thing I've seen on a CV? Something creative. Yeah, I think a lot of people like underestimate that interest section at the bottom. You got to think of like bankers who are interviewing or of any finance professional that's like sleep deprived. Sometimes they're looking at your resume for the first time while you're in front of them. So you got to give them something easy to kind of ask or something interesting. So if you've done something, if you're like if you like do judo or you're like a semi-competitive judo, jiu-jitsu, or maybe they're into MMA, and all of a sudden the whole interview could be about MMA. Or let's say you are a professional yo-yo player. Just random weird stuff. It's great because you get branded as something different. You're memorable, rather than just saying something like my interests are travel, cooking or whatever. Like that's fine, but be more specific. Be interesting. So like, what do you mean cooking? What type of cooking? If you're like, hey, I'm an expert Thai. I'm expert at Thai cuisine. Well, you better know it. But I think that's a lot more interesting than just saying, cooking. So in your interest section, really take a look at it. Try to make it more specific. Try to make it something interesting and unique and not boring and broad. What else is going on? Let's see what else Instagram has. It's funny because Instagram tends to get like 10 times the amount of activity for some reason. I think all the people like us because of the memes we throw out there. Private equity is peace compared to hedge funds. I don't know what that means. Is it quite easy to get into boutique investment banks? No, I don't think it's easy. It just depends on your perspective of how you define easy. I mean, if you're coming from a non-target with a low GPA, I would say it's still very hard, especially if it's an actual investment bank that's doing like M&A deals. Sometimes the small boutiques are hard to get into because they have a ton of deal flow and they're still pulling from the best schools. Could we get some podcast, other content from Rainmakers, just helping the community to really understanding the mechanics, drivers of major deals? That's an interesting request. So this is AMX is asking for that. Are you saying like MDs and partners and stuff? So I've had a couple pretty senior people on the pod, but I do tend to interview more associate VPs, try to understand the track. I think the hard part is with the partners and with the MDs at the banks and stuff like that. There's a lot of compliance they got to get through, and they're not going to risk coming on a podcast even if it's actual done anonymously like I do for some of the associates and IBs. But we can try. There's no harm in trying. It'd be pretty awesome to get some more senior people on there, just for a different perspective, even though they're far removed from like the recruiting and stuff. Okay, here we go. Jack asks, any advice for a first-year Big Four auditor? PE clients, so experience with valuations, basic modeling, that wants to get into banking, networking, boutiques versus middle market, off-cycle recruiting, transaction advisory. Jack, it sounds like you're in just that question alone to me shows that you kind of are already probably headed down the right step. You understand that what you're doing is kind of pretty relevant to banking. So yeah, it's going to be a lot of networking. It's going to be a lot of off-cycle, potentially a lateral hire for you. If you can get to transaction advisory services, I would do that, but you got to navigate the internal politics of being able to switch from audit to TAS. If you can do that after like a year and a half, 2 years, that's going to give you a better chance, because even though you have PE clients doing valuations, you're still technically in audit, so it's going to be tough. But yeah, you should always start networking, always start building up those relationships, so that when you do make that transition, you can kind of update people, and then all of a sudden that one lateral spot opens up. and they will have known you for over a year by that point, and they feel more confident kind of recommending you for that spot, or at least getting you an interview. What should an 18-year-old at a decent university focus on right now to try and pursue a career in banking? Hey, Peter. In terms of priorities, I'd say grades, number one, keep your GPA up high, especially if you're at a decent university, whatever that sounds like a semi-target. Keep your grades high, number one. Number two, just so that you kind of pass the threshold. Number two is just basically joining all the associations and whatnot. And I'd say 2A and 2B is just starting to build relationships and talking to people who are in the industry that already graduated from your alma mater. So start building out your LinkedIn network through alum that are where you want to be, and kind of build those relationships, because those are the people that are going to actually help you land the interviews when it comes time for a recruiting season. So that's what you should be focused on. 18-year-old sounds young, but that's what Grace did on Monkey to Millions. She's one of my mentees in the podcast called Monkey to Millions, where I help kids kind of break in. She started freshman year, and now she's like way ahead of everything. She has offers from Blackstone City. I think she had an offer from PWT, or she was in a super day. So the earlier you can start, it's a huge advantage if you know early. So yeah, go for it. Let's see what else we got here. Instagram, I'll do one from Instagram. Ryan asks, if the goal is distressed debt investing, what path should I be looking at? Hey, Ryan, I would definitely look at banks that have strong restructuring practices. I think I was in restructuring at Rothschild from 02 to 04, and I definitely got some looks from distressed debt shops, hedge funds, and credit funds that do some of this distressed stuff. So if you can understand restructuring, and you understand kind of all the what the fulcrum security is, and all the distress, what happens in a distressed situation in terms of, debt being converted to equity, all that stuff. I think that's a really good start to being a good debt investor. So I'd say look at all the strong restructuring shops. So that includes Moelis, Rothschild, Houlihan. Ideally, you're doing more debtor work than creditor work. I think debtor work's a little more interesting. You're a little bit more close to the model and seeing how the capital structure is built, and kind of, I think probably it's a little bit stronger of a foundation for investing, but I'm biased because I was mostly on the debtor side. How much time do I have? About 10 more minutes, so we're still good. I don't know why I'm getting a call on Skype. Sorry about that if you can hear that. Let's see here. Whoops. You can see this is a really professional setup. You guys are gonna laugh. You want to see what's holding up my phone? This is for people. So for people who don't know, this is a silver banana trophy. It's actually a draft one. Have you guys ever seen this toy, this deal toy? So this is reserved. Oh, let me show the YouTubers. So can you guys see that? So this is like this is a deal toy that we release once every like 3 or 4 years to people who have earned King Kong status in the community. So over 1,000 bananas. And we're going to be announcing pretty soon, if not really soon, that we're doing another batch. We're going to run another one and send them out all around the world. So that'll be fun. So for those of you that are close to 1,000 bananas, you may want to start collecting. Let's see what else we got here. All right, back to some YouTube questions. Why is it so? KJ asks, why is it hard to break into banking after a few years of work experience? Don't banks want more responsible employees with a few years of experience rather than 22-year-old kids who want to party and hook up? It's kind of funny. KJ, theoretically, yes, they would want that, but you have to ask yourself, not wouldn't they want this, but where, think of it this way. There's certain pipelines, certain ways they've done things for decades. To look at non-traditional candidates, such as I'm assuming yourself, they have to like completely change everything and guess. So if you didn't know you wanted banking before and you just came around to it later, yes, you can do it, but you're gonna have to show them that like you can hit the ground running. Especially if they're gonna bring you in as like an older, like 26-year-old, 27-year-old analyst. There's a little bit of concern of like, well, let's say there's a 30-year analyst there that's 24, 25. And are you going to take direction from that if you're 28, 30? It's a little bit harder, so they get a little worried about that dynamic. And second, like sometimes there's MBAs that are relatively young. It's a little bit awkward if you're coming in and you're older than the MBA graduating. So I think that's part of the dynamic, but I think most of it is because they're just they're too busy to actually change the formula that works in terms of the schools they look at, the pipelines and the deals. So like if you can be frustrated that it's harder for you to break in, but I think the best way to go about it is just building relationships with people who are in the industry. And if like you feel like you're not getting a fair look, I would highly recommend you get a resume review through us or through anybody or somebody in the industry to actually like understands what needs to be on your resume to get looks. And that you can find that here under mentors resume review here, or you can get a mentor just to spend half hour with you to run through and just give you an honest opinion. But oftentimes people like overestimate kind of how attractive their resume is compared to the other candidates. You got to remember that sometimes there's like 1,000 resumes per 5 spots. KJ asks, is that actually true or is that gatekeeping? I feel like the traditional pathway is predicated on a lot of socioeconomic factors that have more to do with your parents' background than yours. Appreciate the advice. Than it was probably 20, 30 years ago. I think what really matters is just laziness. It's not gatekeeping. So like think of it this way: they get a pile of 300 resumes from each school. What do? I've heard stories of a guy taking half the stack and just literally throwing it in the trash, saying, "I don't want to hire somebody who's unlucky." That's how random and sporadic it is. Like if you don't have somebody at the bank that you built a relationship with or spoken with, then it's tough. So in the sense of the socioeconomic factors come into play more because maybe somebody from a different background is not comfortable calling that person up and doing such aggressive networking. I think that's where it becomes a bigger problem. But if you're good on the phone, if you're good in person at coffee chats, if you're genuinely curious and you're asking people good questions, you're going to get looks, especially if your resume is on point. You have relevant experience. Like let's say you're in transaction advisory services at Big Four. You've been networking for over a year, meaning you've built up, you've done over 50 calls, 70 calls with investment bankers. You're going to get looks at interviews. The problem is people don't want to put in the work to kind of get those looks. It's a ton of work because you're working full time. You got to like be networking on the side, like doing all these calls throughout the week. So you got to actually like enjoy talking. And if you don't, and if you're a little more introverted, it is a real struggle. It's a real struggle. But it's something that can be learned. So I hope that you don't use the fact that you're not getting looks or this traditional pathway as an excuse to give up. I would hope that you work on your networking skills. You work on building relationships within the industry, because once you have those relationships, you really can get in. You can do it, but it's building those relationships over time. It's not when you need a job or want a job. It's not like coming to the guy and like waiting for that 1 second to be like, so are there any openings? Like that's not going to go over well, especially if your resume is not really on point, especially if you don't sound intelligent on the phone, especially if it sounds like you don't even know what investment banking truly is or what they do day to day. There's all these boxes that you have to check along the way that, when you're doing an interview, a coffee chat, or like an informal information session, people are judging you from the first word that comes out of your mouth to how you hang up. They're judging you throughout the entire thing, even if it's subconscious. So it's if you seem overly desperate, or you're like overly eager, or you're like just bowing down to them, or your questions are really basic, or just a little bit too basic, and they're not nuanced or interesting, or something that could be looked up on Wall Street, Oasis, or Google, like you're kind of dead in the water. So like it's hard to get that introspection without doing a ton of these. It's hard to get that introspection of what you do, and it's hard to know what you don't know without practicing and without reading a ton. But once you understand like the landscape really well, once you've done like 20 of these calls, you're just going to get better and better and better and better, and then you're going to probably start impressing a little bit more and getting a better response, especially if you're not asking for that interview or that job. especially if you don't need it. And it's more like you're doing the building the relationships when you don't need the job. And I always emphasize that people, when they're looking for a job, they're like, okay, I'm ready to start my networking. It's like, well, now it's too late. Not too late, but now it's going to be much less effective than if you had done it and built relationships when you didn't need it. So it's something that it's hard to do because it's one of those things that doesn't have a short-term payoff. There's no immediate gratification from talking to people. That's why the people who actually are genuinely curious about the industry and actually enjoy talking and are extroverts, even with a shitty resume, shitty being like, non-target, low GPA, sometimes you're like, how did this person get in when their GPA is way lower than mine? They went to a worse school. Like, this is totally unfair. See, this is a socioeconomic thing, or it's probably because they have the gift of gab and could bullshit with a bunch of analysts and then show that they understood the industry and said, I'm going to work my ass off, blah, blah, blah. It's probably just that. So just keep that in mind, not to get discouraged, and realize that it's especially in the US, it's very much a who you know game. So that's my rant for the day on networking. I feel like every one of these office hours I do a rant on networking. Any views on SPACs or blank check companies? Yeah, totally huge variance in quality and what's going on. I think there are some good SPACs out there, but there's also a lot of scammy SPACs. So be careful. I think it's really good that some of the air came out of a lot of the shitty SPACs. So there's that. ETA on the next episode of Monkey to Millions. Good question, Joey. I think probably in a few weeks, if not this week. I know we've had less sessions lately. It's just been really busy. Victor and Grace are still kind of working with me. I'm eventually want to take on another mentee. So if you're into, if you potentially want to get mentored by me, you might be hearing a lot of the same things in the office hours and just push to mentor. I think what Grace said was that it kept her kind of diligent and responsible to actually do the stuff that she didn't want to do, or that's harder to do. Okay. Jeff asks, what are the best boutiques to break into for a recent graduate without an internship because of COVID? Jeff, any boutique is the best. If you graduated, you have no job, you have no internship, any relevant experience is back. I would even say bank. I think you should broaden your net. I think you should, unless you can live with mom and dad forever and they can pay for stuff, like just being honest, you don't want to be unemployed for too long. Yeah, you can lean on the COVID stuff for a little while, but things are opening up. Banks are busy. They want people. If you can get even just an unpaid internship, if you're unemployed now, it'd be great if you be unemployed but have an unpaid internship to build up that resume so that you do start getting some looks from boutiques. And best boutiques are like all the typical boutiques. So just you come to Wall Street Oasis, hit resources. You can go to full company database right here. Actually, you can go, I'll just show you this. There's literally a list of banks right here. There's a bunch of boutiques here that are really highly ranked. So we got Houlihan, BMO, RBC, Harris Williams, Jefferies, all these are great firms. Baird, Evercore, way up there. Rothschild, where I was, Moelis. All these are going to be great places to be if you can get in. It's just super competitive, especially if you already graduated without an internship. So if you did have something lined up, but you lost the banking internship because of COVID, there might be a line in there. There might be something you could put on your resume that would indicate that would be strong. And then in its place, I would have stuff like financial modeling training that shows you're doing a lot of self-study, a lot of self-work, that you're not just sitting at home, pouting because you lost your internship. But if there was a firm that took away your internship because of COVID, I would have maybe the firm their internship, and you can say rescinded due to COVID or COVID-19. I think that would be a totally legitimate thing to put on there. So at least you have a name showing that you went through the process, you got the interview, you got the offer. Because then at least you're not just have a complete, it's not completely empty. Let's see what else. Does Wall Street Oasis have specific valuation models for SPACs? No, although I'm not sure why there'd be a different valuation model for SPACs. I mean, SPACs is basically an empty shell, and you're acquiring, you're bringing public an actual company. It's just a way to get around the regulatory reporting requirements of like an S1, having to do an S1. So I don't think the valuation is very different, except, yeah, SPACs, it's like the value is 500 or 300 billion or 200 billion because who knows? We don't know the financials. So it's very risky to be investing in SPACs without knowing those financials. So once you do have a sense of what the financials are, you can do any sort of discounted cash flow, precedent transaction, trading comps type of analysis that would be specific for not just for SPACs, but for any company. Let's see what else we got here. Hey guys, hey. Where are the legit sites to analyze and find legit news about cryptos? Honestly, I'm not sure. Let's see here. Hey, you're welcome, KJ. Julian asks, what's the difference between a good analyst and a great analyst in terms of an annual performance review? Good question, Julian. I think the first thing is attitude. There's actually a thread on WSO. Great analyst. What makes... Let's see if this works. We've revamped the search recently on WSO because people were complaining it was such shit. People are saying they search Google more than they search our own using our own search thing. So let's see if this helps. What makes a great analyst? Here we go. I would read this. There's 42 comments. What makes a great analyst? So right here, that's a great thread. But there's a lot of these, man, over the years of what makes or breaks a candidate in a final round. What makes a successful person? But I remember this one. I think what makes a great analyst. I think this was a good one. And there's plenty of certified users. So you can see this comment right here had 21 silver bananas. I'd read this. This is from a certified user, so meaning they're a professional. They've been in the thing. So like read through that, and that'll give you a sense of what makes a good versus a great analyst. To be honest, you could do everything perfectly, and there's still a lot of element of luck associated with it based on what deals you get staffed on and who is your VP and MD. Sometimes you get staffed with a VP or MD that's working you 90 plus hours a week is unreasonable, and it's just never going to be happy based on you sacrificing everything for them. So in those situations, it's hard as a young kid coming out of college to feel good about yourself and feel like you're doing well, even if you're if you're not top bucket. So I think it's important that people realize that investment banking it's just a job. It's not life. You're not defined by your job. And so even if you do all the good things, you have a great attitude, you're understanding the bigger picture, but you still have great attention to detail, you take good notes, and you come back, you don't ask the same question twice. Even if you're doing all these things and you're quickly developing your financial modeling skills and trying to learn more when there's downtime, you can still get unlucky. So just know that, and there's relative bands of that. So there's some people who are just like thrown into horrible situations, and there's some people who aren't that good who are given great situations, and they're given top bucket because they're on the biggest deals, and their MDs or VPs are just happy because maybe they're bringing in a ton of fees. So just know that can play a big role, and not to take things too seriously in terms of your first few years out of school. You're going to work really hard if you're in banking. So try to keep your head up, keep a positive attitude, and that's probably the best thing you can do. Listen, everybody, I got to run. Unfortunately, it's coming up on my call at 10 Pacific. So thanks for joining. Monkey's happy you're joining. Thank you. Make sure you hit the like button. Subscribe for all you listening. And, oh, wait, I should have done the blue monkey. I have a lot of monkeys here. Should have done the blue monkey. Say bye, everybody. Say bye. See ya. Thanks, guys. Thanks, everybody. Appreciate you joining.